Alrighty, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. It's been, well, at least we got a little bit of volatility. So let's start off talking about the equity markets. I'll come back to the dollar index. So we were talking about earlier this morning on the FACE webinar, key resistance at the S&P. We slipped and we fell. And we're really at, as you can see, we broke through some support. I think what's most important to see here. Let me grab my pen. Where is the? It is here. We go. Okay. All right. So I think what we should be looking at initially is lower high. Right. You can see that potential. I'm gonna throw this very loosely out there, potential of a head and shoulder pattern. Okay, shoulder, shoulder, head, right? And that would project, something to the extent of, maybe back down here again, which would be a retest of this trend line. Okay, that's possible. I'm not super gung-ho on that. And the reason why I say that is just because as you guys know, being bearish, the equity markets, very tough to do. It does, I guess we get some selling from time to time. And as I pointed out via Twitter a little earlier, is that, and in the chat room too, our daily sentiment index was, has been a little extended, and the market's probably a little tired up here, and we're up against key resistance. One of the things that makes me believe that retail's pretty long, and I was telling the guys and gals in the chat room, is because if you look at Twitter and you look at my last tweet about the S&P, when I was talking about the S&P, I got 9 favorites. Now, when I send out a chart, I don't necessarily always get a lot of likes, or I'm sure I get a lot. There's probably a lot of dislikes if they could actually dislike it. But the fact of the matter is I look for the favorites not because it makes me feel good. I look at it more to kind of judge retail sentiment. Like if I send out something I know everybody's aggressively, like let's say I think everybody's aggressively long the euro, and I send out, oh, here's a euro bullish chart, I'll get like 20, 25 likes, right? If I send out something that is against what the public is thinking, I tend to get less likes. And so when I sent out that bearish chart in the S&P earlier this morning, when we were up, up here, I knew the market was probably pretty long. Now, obviously, we came down for some reasons, probably more COVID reasons, Donald Trump's taxes might be released over the next 6 to 12 months or something, probably after the election. The market got a little worried about that because that might, it's not going to impact the election because it's not going to be released. Even if they are released, they're not going to be released ahead of the elections, from what it seems. But still, you can see them just go off the handle today as a result. So with that being said, the market's got a little shaky, and so we slipped and we came through support. And now, if the market's going to fail, it's going to fail up at these levels. Now, one of the things I want to point out is it's not just the S&P though. You see the Dow. The Dow's under a little bit of pressure here, but the Nasdaq's still holding up very, very well. And I think the Nasdaq you just got to be a little careful with, because the Nasdaq does have the ability to drag up the rest of the market. But one of the things that I wanted to point out is this here. This chart, this was out in the chat room. We're trying to probe this uptrend line, and I guess you could probably do it like this, right? There's probably your trend line. Shoot, something like that. Okay. All right. Yeah, something like this, right? But notice how we were rallying in the RSI was divergent, right? That's I mean that definitely is starting to become a bit of a risk for equities. All right, so you know, just, okay, so the question is, well, if equities roll over, what does it do to the dollar? Well, what we're seeing with the dollar is starting to firm up. And so, as I was mentioning earlier this morning on the FACE webinar, we have a risk of the dollar turning, not fulfilling this this bear flag pattern, right? And if we start breaking above 97, this is a big deal. Big deal to me, right? If the dollar index starts breaking 97, so you got to kind of look at this trend line right there. In fact, I'll set that up as an alarm just to be notified. Give me 1 second. DXY 4-hour downtrend line. Okay. So if we break through that, then you know the risk of a like longer term consolidation in the dollar is quite high, and then we're going to start to see the dollar, you know, rally. Now, what we are seeing is we're seeing the euro weaken from pretty key levels of resistance. Like I said, I wasn't too convinced about the euro. While we failed above the 113.50, pound, I mean, the pound came within just a couple pips of my sell order. I'm kind of irritated that I didn't get triggered there, but you know, this is a major downtrend line for the cable. If you guys use ForexAnalytix, you guys already saw that. The Aussie, you know, once again showing failure at this key level of 70 cents. Kiwi, we broke or tested 66 cents and reversed. That's important. For me, it's important. This is the support that I'm actually really care about, is right here. Right through here, right? You know, we start breaking back below 65.20, and then you've got to think that the Kiwi is ready to really start to pull back a little bit. And the dollar Mexican peso, this is another risk. You know, we start breaking back above the 22.90, and that's a big break. And this, you notice this chart. Let me grab this in the S&P. Is it the S&P? No. Dollar Mexican peso, and let's match that up with the dollar index. Damn, that's not what I want to do. Okay, dollar Mexican peso. This is the dollar index, right? So this is the dollar max. So, well, I'm just roughly going to draw it, right? Just, you can see. What happens, you know, if we do this? Right? Same thing. Okay. So keep an eye on the peso, because I think that'll give us some clues. Nissam asked about gold and silver and platinum. God, I don't even look at platinum, but I'll look at those. So gold, Chi asked for this in the chat room, and this is what I think about gold. And by the way, if you looked at your updates, last update an hour ago on gold, it's right here. I think we're going to retest this 1760 level. You know, we came really close to the 88% retracement, and you know, now we're rolling over, and I think that's what's going on with gold. You can see it right here. It's the same. It is my chart because I sent it out. Oop, that's silver. Hold on. There's gold. Right. So this is what I think about gold. I think we're going to come back down towards 1760. Silver, you know, we failed at, this is the big resistance from the spike high right here back in February. So we basically hit it, reversed. Now this is probably pretty key for silver. If we get below 1840, then you know, some of the air might come out of silver as well. And maybe, you know, if silver and gold go down, it'll you know, maybe go down with risk appetite. Who knows? Because you know, they've been moving with risk recently. So there's silver, and then you asked for platinum. What is that? XRP. Oh, hold on. I'll just write it. Platinum. Let's go to a, there we go, XPD USD. I haven't looked at this in ages and eons. I don't, okay. So daily chart, platinum. Key reversal there. Lower highs, right? High, low, 618. Why not? And this is just me thinking out loud. Why not be short while it's below 860? Gets above 860, then then we're going to break this high right here, easy. That's the 200-day moving average. Yeah, I mean this is all big time resistance. The risk reward here is to be short. Okay, so there you go, Nissim. Jason said, hey, did you look at the dollar Canadian? Did I? I didn't, but so irritated. In the chat room this morning, so irritated. I've traded this like a freaking bozo. I bought the dollar Canadian this morning at 134.90, 134.96, I think, right here. How about it right here? We got to the 09, so we spiked up here into resistance, and I sold it. And then all this shenanigans happened, and my focus is elsewhere. I was actually buying the Euro New Zealand down in the 70s, and which is fine. But don't you hate it when you pick the wrong racehorse? It's like I got smashed in this yesterday. I mean, yeah, I made a little bit of money today in it, but not. I didn't make back what I lost yesterday. And then I turn my attention and I focus on this because I was too busy looking at the Kiwi possibly fail. So I bought, the Euro New Zealand down here. And of course, I mean, yeah, it moved up, 40 pips or whatever. But, the dollar Canadian, based on the size that I'm trading, I would have paid me way more than what it paid me in the Euro New Zealand. And I mean, I would have made 80 pips here, and I would have made pretty much double what I did in the Euro New Zealand. So it's so frustrating. So frustrating. Yeah, and Dimitri said I picked the dollar Canadian long yesterday and then got stopped out, and today I missed it. Me too. The exact same thing. I mean, the difference maybe would be with me, Dimitri. I did buy it down here. I bought it here, sold it here, thought I was a badass, and now I'm a dumbass. Imagine that. Yeah. I hope you guys can I hope you guys can appreciate sometimes my openness about the trading. And Jason says, I've been following you since WiseTrade. I noticed that you trade differently for the fund than you did with your personal account. You seem to hold longer in your personal account. Thoughts on why? Is it the size difference? Yeah, it's absolutely the size difference. When you're trading 20 to 50 times the size that I used to trade, I mean, look, I'll give you an example. I could have been. Well, that's probably a bit of an exaggeration. Probably more like 10 to 20 times the size of what I would trade. So for example, I would, back when it was just me trading for myself, I'd buy like 100,000 Euro New Zealand, yeah, it drops 100 pips, I lose $800, $1,000 or whatever it is. Not a big deal, but it moves $400 or $500 for me. I can make $4 or $5 grand. Then I take my family on a vacation, Now, I buy the Euro New Zealand, I might buy 1 or 2 million of it. So if I buy 1 or 2 million of it, and let's say I buy 2 million of it, and I'm down 100 pips, next thing you know, I'm down 20 grand, and it's like, oh crap, when I make money, I can make like 50 or 60 grand. But then at the same time, when I'm up the bigger amounts, I get a little freaked out, and I'm like, oh, I better take that off the table. You know what I mean? Especially if you had a $20,000 smacker, then you know, you're up 20 grand. You're like, oh, I need to make that back. And then, you know, so it's been a learning curve for me. But yeah, especially with some of the, sorry, I was just eating a mint. As with some of these ones that are extremely volatile, like the Euro New Zealand or the Euro Aussie, is a good example because I've been sitting in this thing since at 162.50 for like forever, like almost the, you know, forever, like since here. You know, it's like sometimes it's a little bit harder when you got bigger position sizes, right? Anyway, okay, so hopefully that all made sense. Guys, I'm going to let you go. But remember, if you're not part of ForexAnalytix and you're not in the chat rooms with us, that probably means you're not a subscriber. So make sure you you jump in when you get a chance and say hi to us. It's only $1 for 10 days. For those of you guys that support us, thank you so much. Appreciate it, each and every one of you. Remember, we won't be broadcasting tomorrow since tomorrow is Friday. Have a great one, guys. Thanks, everybody.